What's going on, everybody? Lake the Stock Bull here. Thanks for checking out my video. Today I got 5 high growth stocks that I think you're really going to like. So let this intro play out and stick around. I think you're going to love what you have to see. Hey everyone, thanks for checking out the video again. I really appreciate you. We got some stocks today that are just, they're just waiting to head off to the moon. They're waiting to absolutely explode. These are stocks that are pretty hyped up currently, and I think are going to keep getting growing and gaining revenue in the next couple days, months, and yes, years. So I think these are some stocks that you give them a couple weeks, months, years, these stocks are going to at least 50% grow. They may even double, triple. You never know. I mean, the potential with these stocks are unlimited. And as the market cap keeps growing, these stocks are going to keep growing even bigger. So stick around and let's get right into it. Before we get into it, though, there's 2 stocks I want to shout out. And the first one being NIO. I absolutely love NIO. It's a rival to Tesla. And, hey, it's a Chinese company with the backing of the Communist Party. So you know they mean business. It's one of the stocks on the list today, but I want to show you what NIO's already done for me and for all my investors. So I purchased NIO back in the end of September when it was just under $19 a share. My average cost is $18.78. And today here, I'll pop up the graph of NIO. Hey, we're up to $28.33. That's right, almost 49% in the last month. That's incredible, guys. I believed in NIO for a long time. And hey, always love to see 50% gains, hey, in a month. All right, so the next stock I got for you guys all that we've done well with in the past is going to be Peloton. I'm up about 120% since I purchased Peloton a couple months ago. Now, I know there's been a big pop lately in this cycling company. And, well, I mean, I've sold. I'm not going to lie to you guys. I sold around $90, and, hey, I picked up some more shares around $95. Today, we're sitting at just under $130 a share, and I absolutely love Peloton. It's a fantastic company. They played COVID very, very well. They got people working out, and they got people staying active and healthy and interactive with their communities on a bike. I absolutely love their business plan, and I'm very, very proud of what Peloton has done, not only for my portfolio, but for the country and for the world. So I'm thrilled about Peloton. All right, so the first stock that I absolutely love for this week is going to be NIO, ticker symbol NIO. And it's trading right below $29 at $28.40 when I'm recording this on Sunday. And I think NIO is a buy anywhere below $30 and even into the low 30s. So basically, the reason why I love NIO so much is because it's a rival to Tesla in China. They have a $1 billion grant from the government, so they're financially backed by the Chinese government. They absolutely love the company, and they're expecting it to keep growing so they can be one of China's largest EV manufacturers. Another reason why I absolutely love NIO is because JP Morgan, ever heard of him? JP Morgan Chase? Yeah, an absolutely huge financial planner. They came out and they gave NIO a $40 price target, which means that they expect NIO to be at $40 in the next year, which is incredible. Because when they put that out there, NIO was trading slightly below $20, and now it's already at $28.40. Since they came out and said that on Wednesday, we've been up 30% in the last week, and in the last month, we're up about 49%. And I've been holding NIO since, like I said earlier, late September. So I've been loving NIO for a while. I'm glad that JP Morgan hopped on the board. But yeah, I absolutely love NIO. Another catalyst we got for NIO coming up it's called NIO Day. This is going to be on January 6, 2021. And it's kind of like Tesla Battery Day or these big unveil events where NIO is going to come out and they're going to give you a bunch of relevant information. They're going to come. A lot of people are speculating that they're going to even come out with a new SUV, a new electric SUV, which would be absolutely massive for their market cap as well as for their share price. Because when there's new products, people want to go buy them. The demand goes up, and people are real happy for NIO. Another catalyst is coming up slightly before NIO Day on January 4th, 2021, is going to be their earnings. So we're going to find out how they did financially, their revenue, their cash flow, all that good stuff. And hey, I think they're going to absolutely kill earnings. I think that's going to boost their stock price even more. But what we can do in this very volatile market is we can closely track the price of NIO, and we can keep trying to ride those waves up. so that when the price goes up slightly before earnings, maybe we sell a little bit before earnings, and then when it dips down after earnings, gets oversold, we buy more. My big plan for NIO is going to just be keep buying the dips, because I absolutely love NIO as a long-term hold. I'm not just buying it and trying to sell it next month. I have sold some shares of NIO just to take profits. If you keep making money, you're never losing money. So I've done that, but I really love NIO. If we want to look at the graph, again, we're up almost 50% in the last month, which is incredible. We're up at just below 28.40. And I bought the shares slightly below $19 over it. I think it was $18.78 a share. So we're up absolutely massively. And I don't think it's too late for you to get involved in this company. I think the price is going to keep going up over time. I absolutely love it. If we want to take it their earnings estimate, they're expected to only get minus 0.51 cents per share. Which, I mean, I think they're gonna kill that. I think it's a very low estimate for their earnings. I think that they've done very well. I think the EV market is growing, and I really believe that they're going to kill the earnings. And as a result, unless the price is already factored in, I think the price of NIO is going to go up even more, maybe even above $40 by January. So definitely a stock to keep watching. And hey, I'm gonna hop right into the next stock. All right, so the next stock that I got for you all is going to be Snapchat, ticker symbol SNAP. Now, this stock is trading just above $28 at $28.05 when I'm recording this, and I think that this price is going to go up probably to above $29 before earnings. So we got earnings coming out on the 20th of October, which is in 2 days from when I'm recording this. That's right, this Tuesday, and I think that Snapchat is going to absolutely obliterate earnings. Let me tell you why. Now, if you're part of the younger generation like me, you know how much kids use Snapchat. Kids are constantly checking their phones. Kids are constantly on social media. And Snapchat's one of the biggest social media platforms for kids my generation. They use it for posting pictures. They use it to message friends. And they even use it to look at their little TV shows and their other fun story content that you get on the app. Another thing about Snapchat that I love is that you get new content monthly. They're constantly filling it with new filters, new things you can do with the app. You can search for music on the app. Just by clicking a button, you can find what song was playing. They have so many cool things they're doing with the app right now. When you think of it from a fiscal perspective, they've been killing it. I don't know if you've seen, but the amount of ads you're getting is increased. You have to watch them. One thing notably is election ads. I'm seeing so many election ads for Trump and Biden on the app, on the platform. I've just been bombarded with them. So I think that Snapchat's going to be very, very good on the revenue for this quarter, and I think that they're going to absolutely kill their earnings reports. Another thing about Snapchat that you don't have to worry about so much when compared to Facebook, Twitter, or Google is there's less volatility. I mean, Facebook and Twitter, the CEOs of those companies, and Google are having to testify in front of Congress. They're being subpoenaed in front of Congress this week because of censorship. We've never had to worry about it. This is Snapchat investors. I've held Snapchat for many months now. I bought it right before the market crashed, and I'm still positive with Snapchat. I like their game plan. I like their business model, and I think they're going to keep killing it. I think we're going to expect a very good run up right before earnings, and then I think we're probably going to see a sell off like we usually do after earnings, and then I think that the price is going to keep going up. I think that in a year from now, Snapchat's going to be at least a $40 company. At least. I mean, the amount of growth we've seen after the pandemic, it's been crazy. I mean, Snapchat it was at $8 a share a couple months ago. Now we're sitting back at 28. So yeah, I mean, Snapchat, it's a very large growth company, and I mean, when you compare the market cap, it's 41 billion compared to Facebook's 560 billion. There's a lot of room for growth for Snapchat. I mean, it's still a very small company, not a profitable company yet, by the way, when you compare it to Facebook or Twitter. I mean, I mentioned Facebook, but it's still a very small compared to these absolute giants. So there's a lot of room to grow for a very well-known app that a lot of people use. So what I hear when I see that is I see a very large upside and a very low downside. You just got to put this money away, and you got to wait, a year and see where it takes you. And I guarantee you, probably definitely, it's going to be in the green. So yeah, that's Snapchat. All right, so the next stock I got for you all is Tesla, ticker symbol TSLA. Now, Tesla's currently trading at $440 a share, and I think that Tesla's a buy anywhere below $450. So Tesla's a pretty volatile company. It always has been. We saw an absolute rocket in the last couple months. Then we saw the sell-off. Before Battery Day, we saw very massive gains, and now we're sitting at 440, which is still pretty high compared to where it was just a couple months ago. So I think the Tesla is a must buy below $450 because I see Tesla as the largest EV manufacturer in 5 or 10 years in the United States. Now, that's a very bold statement, but I think that Tesla, the mind of Elon Musk, is just so innovative. He has such great ideas. If you ever watch interviews with him, this man thinks completely different than anyone else on this planet. I'm investing not only in Tesla, the company, I'm investing in Elon because I think that he's going to keep doing phenomenal things for his country, for his company, for his shareholders, as well as for the world. He's doing some very incredible things, and I would highly recommend you go check out some Elon Musk interviews. Now back to the stock. We're seeing an earnings call on October 21st. That's this Wednesday, and I think that Tesla's going to absolutely blow it out of the water, just like NIO and Snapchat. Tesla's a great company, and I'm expecting higher number of deliveries and a higher EPS at the earnings call. I think that Tesla's going to blow it out of the water. Another thing to note is that California, the largest state in the U.S., is going to be all EV by 2035. The governor came out a couple weeks ago and said that. That means that he wants no net carbon emissions from all of his cars by 2035. That's absolutely huge for Tesla. There's a lot of wealthy people down in California, and they all want to drive luxury vehicles. And right now, Tesla's a luxury vehicle that has no emissions. It's phenomenal. As an investor, I'd love to hear that. The last thing I want to mention when we talk about Tesla is I want you to ask yourself, Tesla's right now at $440 a share. In your lifespan, do you ever think that Tesla is going to be worth more than $440? If your answer is yes, you need to go buy shares of Tesla. And if your answer is no, hey, stay away from Tesla. Do not invest in Tesla. But I think Tesla's going to absolutely murder 440. And I could see it even being a $3,000 company. Oh, I said it. In the next 5 years. All right, everybody. So now I got two stocks that are pretty fun. So these are some very, very high risk, high reward types of stocks, penny stocks. So before I get into these, I just want to make sure you guys all know to have stop orders. This means you need to choose however much amount of money you are okay with losing on these stocks. Typically, mine are between 10 and 15%. If you're on Robinhood, you can set that up. It's called a stop loss order. You make it so you calculate 10, 15% of the stock. If it hits that, you sell and you accept your losses. And hey, you find the next penny stock, and that next penny stock could go up 40, 50, 100, 300%, and you'll be in the green. So that's how I like to trade penny stocks. All right, so this stock is going to be a bet on the FDA approval of a new drug called Zimhi. Now, this is a drug that is used for the treatment of an opioid overdose. They've passed all 3 phases of FDA approval. Now they have their NDA. Now all they need is that last FDA approval stamp. And we've seen an FDA approval with this company in the past. Their share price absolutely skyrocketed. Could the same thing happen again? I think so. I think we're going to see a nice run up until the FDA announcement date. And I think that if it gets approved, their stock price is going to absolutely go to the moon. So again, this is a very, very high risk type of trade. I do not recommend it for everybody. I recommend it if you have a little slush fund, some money that you don't necessarily care about, very, very small amount of your portfolio. Maybe throw it into this stock, see what happens. Remember those stop loss orders though. I will be investing in this company, very small amount though. I'm talking less than 10% of my profile is going to go into this ADMP. All right, everyone. So the last company that I'm going to be showing you is going to be ticker symbol CBAT. This is a battery company, a Chinese battery company that's trading at $3.29 a share. This is going to be a very short-term swing trade, maybe even a day trade for me, which means, less than a week to a month. Again, a very small position for me. I'm really just watching this one support line that I drew, and if it goes below it, I'm going to sell. I don't want to take a lot of loss on this company. I am going to invest in it, but here's this little trend line that I drew. Again, if it keeps following that, we're going to be just fine. I think it's going to be very bullish, but if it goes below that, I'm going to sell because I don't want to lose a whole lot of money in this company, and this is a pure technical play for me. There's a technical play, there's value investing. This is not value. Value is, heavily researched and you believe in the company. Here, this is just, I see an opportunity that I think the stock is going to go up in the next week. So I'm going to put some money on that assumption, on that guess, and I'm going to hope that it goes up. So this is the riskiest one that I've showed you so far. If you're very prone to risk, do not buy this company. If it opens red on Monday, I would think about not getting into this company. The only way that I'm really investing is if I see that uptrend, I'm going to ride the uptrend until it levels off, and I'll sell. And I'll probably, I'm hoping for about 20 to 25% profit. But I mean, it was up almost $5 from, $1 in a matter of a month. So, I mean, the upside for this company is gargantuous. Sorry. It's huge. This stock could go up massive amounts overnight. We're talking 20, 50% overnight profits percent. So huge upside, very high downside too, though. It could go down that much too overnight, but that's why we have those stop loss orders to make sure that we don't lose all of our money in one investment.